these earnings seasons, and usually the first quarter are always the most interesting to me. And, we see this overhang. We listen to a lot of earnings reports, and about a third of them are mentioning tariffs. So that's already having an effect on confidence.
It is. And I think that we have seen that in terms of the stock market reaction to some of those earnings releases. It's not so much about, what have you done for me lately, that is looking backwards at the last quarter with sales. It's more about what's the guidance that these companies are giving about, are they factoring in tariffs or not in some of the estimates that they're providing. I also thought it was interesting, the National Association of Home Builders, their Builder Confidence Index, that fell for February on tariff and housing cost concerns. And the most interesting thing about that report was that they did the survey where some of them were asked about their views right after the tariff announcement on Canada and Mexico and China, of course, but we know the Canada and Mexico ones have been put on pause. And
Canada is feeling pretty good after their win. Obviously.
Oh my, that was incredible.
And Justin Trudeau gave a shot to Trump, so I thought that was interesting.
Yeah, that was kind of backhanded. I saw that as far as, you can't take our country and you can't have our game. Yeah, that was
I thought it was pretty classy the way that we sang the Canadian national anthem in Boston for that final game.
That's true, as opposed to booing.
And they know a little bit about hockey in Boston.
Yes, they do. Yeah, but with that survey, because a lot of lumber, so 30% of the lumber that's used in home construction comes from Canada. And so those home builders that were asked about their views of the outlook right after that announcement of the possible tariffs, it was very, very low. But then after they had asked the other half, right after President Trump said that he's pushing the pause button on the tariffs, their optimism was a lot higher. So really, so much hinges right now on will those tariffs take place or not.
And really, the industries, of course, are, which ones are being affected, right? Whose ox is being gored? Autos especially, but phone makers, you're seeing a lot of this stuff, especially because we've got an April 1st deadline for some of these folks. But the auto industry, especially the EV, is really, I'm taking a close look at that.
Yeah, with electric vehicles, we know that the demand for electric vehicles in the United States has really begun to fall off. And some of that is just in terms of, range anxiety, things like that. Maybe that's kind of saturated as far as the early adopters of the technology. But now the prospect of having maybe higher costs because some of the component parts are built outside of the United States. Some of the analysis that I saw suggests that a car, all the parts that go into it, that basically those parts go back and forth between the U.S. and maybe Canada or Mexico or other borders like 8 times before it actually ends up as the final product. And so a lot of the automakers are talking about, we have these integrated supply chains that go across borders that could be really disruptive to their business model and consumer prices. One of the estimates I saw suggested that car prices could go up on average about $3,000 as a result of tariffs, just because of the possibility of that 25% tariff on Canada and Mexico.
Of course, this is all speculation. We'll see if any of these tariffs actually come into play because, we know that Trump wants to onshore a lot of this. And he's using this economic tool. But, as earnings season slows down, and we're getting really to the end of it right now, and we're going to have this gap of information. But on balance, Brian, earnings season has been better than expected.
I would say so, yeah. Coming into it, analysts were expecting about 11% earnings growth year over year. It's coming in closer to 17%. I think that one of the more important things to notice is that it's much more broad-based in terms of the gains. It's not just the top 7 companies that are making all the money. It's actually not just the other 493 in the S&P 500, but you can even consider the other like 3,000 that are also publicly traded in the United States. They're seeming to have a little bit of a reacceleration of those earnings. And so, there are risks on the horizon, of course, but I am finding comfort in seeing that there is that broadening of the base of the earnings momentum that we're seeing.
We always talk about the S&P 500 and the Mag 7, but you're talking about not only about the other 493 in the S&P 500, but the larger opportunity set, so mid cap and small caps. And that's really when we talk about creating opportunities and looking at portfolios, you look across not just the S&P 500, but the entire scope of investments.
That's right. Yep. It's not just the United States either. It's also including international. And within that international, you have developed markets, you have emerging markets. The international markets have actually outperformed U.S. markets year to date. So we're only 2 months into it. And over the last 15 years, the U.S. markets have done exceptionally well compared to non-U.S. investments. But maybe sentiment was so negative going into this year as far as what policy changes might look like, what economic growth looks like in those foreign countries, that valuations maybe now justify some of that allocation to international. I mean, it's a big world out there, and I think most people's portfolios, it would be prudent to consider having it actually consider all of those opportunities that are out there instead of just in the United States.